Yeah, well, I think you got to respect the price action last week, Scott. And, we talked about it last week, and you're bringing it up now. It was frankly not good. I mean, it wasn't terrible, but it was certainly meh. It was tepid after blowout earnings from tech. So we're certainly not getting a catalyst from tech earnings. Now, you do have a bunch of industrials and energy names reporting this week. I think they're going to be good, but honestly, I'm not expecting a strong market response. I don't think this is fatal, though, Scott. I don't think this is something where you've got to do that sell in May thing that I absolutely hate. I hate that adage. I don't think it's useful at all. I think at worst what you've got is a sideways consolidation period here. But you get into the summer and you get a little bit more clarity on taxes for next year as those negotiations go on. And you may hate my saying this, Scott, but even though Jay Powell was very crystal clear last week, I still think the market doesn't believe him. And over the summer, if he's going to start talking about tapering, that would be the time to do it. So maybe if he doesn't, then the market gets a little bit more wind in its sails. All of which says throw out that adage of sell in May. It's a useless adage,
it is.
Especially when you've got as much going on this year.
Just go by history's sake. I mean, in the last 8 years, the major averages have only fallen one time in May, and that was in 2019. So
yeah, look at last year.
Yeah.
Look at last year. If you sold in May last year, you missed out big time.
Well, I mean, come on. The cavalry came to the rescue along with the Army, Navy, Air Force, and Marines. I mean, okay.
It doesn't make it less real.
I hear you. Asterisk, though, in 2020. Steve Weiss, where does this leave us now? Best month for stocks since November. As I said to Jim, earnings, I mean, you can't find anything wrong with earnings. I said 87% of companies have beaten expectations. But since earnings season started, stock market's done next to nothing.
Well, look, I think what we've got now is a period of digestion, and that's typical after earnings. Nobody had been expecting that earnings were going to disappoint. Everybody was very enthusiastic, so they positioned ahead of it. Now, I can't tell you that I wasn't surprised, along with the rest of the world, that Amazon actually closed lower on the day Friday after what can only be termed a phenomenal record-breaking quarter. So it's period of digestion. We're still looking forward in terms of deciding how to get invested in terms of the general market based upon what Jim Lebenthal pointed out, the Fed. So you have Lee Koopman with his interview, you have Buffett, you have Munger, all calling out saying, hey, inflation is going to pick up. Nobody sees it as transitory except Yellen and Powell and his colleagues on the Fed. And I think that's the issue. Now, going into that, we've got some modest numbers today in terms of economic reports, but it's going to be a big number that we're looking at on Friday in terms of payrolls. 1 million right now is the baseline narrative. If we see much more than that or much below that, then you could see some action in the market one way or the other. But with the insatiable appetite that foreign countries have, sovereigns and businesses, for U.S. 10-year and other bonds up and down, as we've seen in the auction, as long as rates stay under control in terms of yields, not Fed rates, you'll get confirmation in the market. And I think the market moves up. But you can see it trade down. What's more important is where you are in the market. And despite where the VIX is, that belies what's actually happening in the rotation.
Well, hold on a second. I'm going to stop you right there. I'm going to stop.
I'm
sorry. I'm going to stop you right there. You said it depends where you are in the market, right? That's everything. You lowered your tech exposure.
Yep.
You trimmed Micron. Okay, tell me why.
I did. Yeah, so I went into Micron as a trade, and it sort of didn't work out. So I cut it back. I still think it's cheap, but, I'm looking to increase, which I've been steadily doing over the last 6 months, a year, into the cyclical exposure. So as I mentioned on the show on Friday, I increased my position in Atcor. Look at that stock today. Phenomenal quarter. It was also weak, well, basically flatlining after the quarter. That's a cheap stock. I increased LyondellBasell, which is LYB. They had an excellent quarter as well, but the stock actually traded down on it. So I think those stocks are more likely to do well, given that they're selling at like 10 to 12 times earnings, and lower in some cases, than some high-flying tech stocks.
So, Tiff, tell me how you view the markets as we enter May. I'm reading a headline right in front of me. Governor Cuomo announces the elimination of state-mandated capacity restrictions in New York on May 19th. So we're going open, right? We're to the point now where we're going full throttle open in the next few weeks. The economy is going to continue to recover. The stock market clearly knows all this already. So what's the next catalyst to take our viewers' money higher?
Yeah, you know, we are in about to be in full reopen mode. And as you mentioned earlier, stock fundamentals are extremely strong right now. You know, in terms of earnings, 87% above expectations. Also, consumer spending is strong, and consumer savings is strong. So they're going to have money to continue to spend when we get into a more full reopen environment. So, you know what, I'm looking at, and earlier, you know, we were talking about the market, how strong earnings are, but then that link to markets, right? So I think we have to pay attention to investor reactions. It's not just the good news, but how are investors looking at this and how are they reacting? So, you know, I'm not selling in May. I'm actually buying, and I'm looking at two things. Number one is opportunities to buy the things that I love that are on sale. Right? That's just very, very clear. Number two,
a shopper at heart.
I'm also buying the stories. Of course, yeah. Number two, I'm also buying the stories that people are not paying attention to, right? So again, we're still in this stock pickers environment. There is definitely opportunity there, and you can't paint all of this in terms of, like, for instance, like broad brushes, like industry and things like that. It's not the pure plays, but it's really the larger themes that I'm paying attention to and looking for those opportunities within those select opportunities within those larger themes.